So when you hear Australia and China, you probably think of rivals, right? I mean, the headlines are just full of tension, trade wars, military pacts. But behind all that noise, there's a completely different story. It's a story of an economic bond so deep, so essential, that it seems kind of unbreakable. So how on earth does that work? Let's get into it.
And that's the big question, isn't it? It's this central paradox we're going to tear apart in this explainer. You've got this massive gap between what the politicians are saying and what the cargo ships are actually doing. And what's really wild is how this contradiction plays out with the raw materials that literally power the entire global economy.
It's like two different worlds. In one world, you've got the political rhetoric. They're foes, competitors. Australia's teaming up with the US and UK in AUKUS, while China flexes its muscle in the region. But then you look at the economic reality, and it's a totally different picture. There's this incredible flow of strategic stuff from Australia to China that hasn't just continued. In some cases, it's actually gotten bigger. So let's follow the money, or in this case, the minerals.
Okay, we have to start with the big one, the absolute giant, iron ore. This isn't just about trade. This stuff is the very foundation of China's modern industrial power. And that foundation, well, it starts in the red dirt of Western Australia. Just look at this number, 60%. Let that sink in for a second. That's how much of the iron ore feeding China's monster steel industry comes from Australia. We're talking about an industry that churns out more than 1 billion tons of steel every single year, and most of its key ingredient comes from just one country. You remember when things got really frosty, right? Beijing started slapping bans on all sorts of Australian exports: wine, barley, even some types of coal. They were making a point. But there was one thing, the one thing they couldn't or wouldn't touch, and that was iron ore. Now, that wasn't a mistake. It was a cold, hard strategic calculation, and the reason for it comes down to simple physics. It all comes down to something called the blast furnace reality. See, China's steel mills aren't just factories. They're more like giant, incredibly picky chemical reactors. Over decades, they've been designed and fine-tuned to run on the very specific quality and grade of iron ore that comes out of Australia. You can't just swap it out for something else, not without risking catastrophic damage to the furnaces and basically grinding their whole industrial engine to a halt. And to get a sense of just how massive this is, think about this. China's steel industry is so huge and so carbon intensive that if it were its own country, it would be the 5th largest carbon emitter on the entire planet. So yeah, this dependency isn't just economic, it's physically baked into the biggest industrial machine ever built. But that doesn't mean China likes it. Of course not. No country wants to be that dependent on a geopolitical rival. So for years, Beijing has been quietly searching the globe for a way out, for a long-term escape plan. And it looks like they might have finally found it. And that plan has a name, Simandou. It's this enormous, high-grade iron ore deposit way out in Guinea, Africa. For decades, it was just too hard, too remote to even bother with. But now, people are calling it the Pilbara Killer, the one project that could finally let China break free from Australian ore. And when you look at the stats, you can see why. We're talking about the world's biggest untapped deposit, a multi-billion-dollar project. And surprise, surprise, Chinese companies own the majority of it. With production just starting up in late 2025, it really feels like a turning point. So, this is it, right? Game over for Australia's leverage? Well, not so fast. Because just when it looks like China has its escape plan ready to go, the entire world changes the rules of the game. There's a new pressure now, a different kind of pressure. And it's forcing Beijing to look back to Australia. Not for what it needs today, but for what it's going to desperately need tomorrow. And this, my friends, is where we get a fantastic plot twist. Yeah, suddenly the conversation isn't about breaking up anymore. It's about forming a whole new kind of dependency. The push to decarbonize is creating an entirely new kind of strategic codependence. And once again, Australia is right at the heart of it. Okay, so here's how this plays out. Step 1, you've got the problem. China's steel industry, as we said, is a massive polluter. Step 2, the goal. Beijing has made this huge pledge to be net zero by 2060. Now, there is no way, absolutely no way they hit that target without cleaning up their steel. And that brings us to step 3, the big opportunity for Australia. With all its sunshine and wind, it's in the perfect spot to produce something called green iron, basically a key ingredient for steel that's made using renewables instead of coal.
And you don't have to take my word for it. Listen to Andrew Forrest, the founder of the mining giant Fortescue. He's basically saying this isn't just some nice idea, it's an economic necessity. Australia can shift from just shipping raw dirt to shipping a much higher value, low carbon product that China is going to desperately need to meet its own climate promises. The old addiction could literally be replaced by a new green one. And you know what? This pattern isn't just about iron. This exact same dynamic, it's playing out all over again with the key ingredient for the 21st century economy, lithium, for electric vehicles, for batteries, the whole shebang. The same story of strategic codependence is repeating itself. Okay, check this out. This is the ownership breakdown for Greenbushes, which is the world's biggest and best hard rock lithium mine. It's in Western Australia. But take a closer look. A Chinese company, Tianqi Lithium, holds a 51% majority stake. Just think about that for a second. The single most important asset for the green energy transition, located in Australia, is already majority co-owned by a Chinese firm. And that co-ownership, well, it shows up in the trade numbers. A whopping 70% of all the lithium that comes out of the ground in Australia gets put on a ship and sent straight to China. Why? Because while Australia is great at digging it up, China has pretty much cornered the global market on the complex process of refining it into the battery-grade material you need. They are two halves of one essential supply chain.
And this is where things get really fascinating and a little contradictory. On one hand, you have the Australian government talking a big game about de-risking and protecting national interests. They're actively blocking new Chinese investment in critical minerals, like when they forced the sale in a rare earths company in 2024. But on the other hand, the most vital lithium asset in the entire country is already deeply integrated with Chinese capital. It's like you're locking the front door after your most important partner has already moved in and is making coffee in the kitchen. So, when we put it all together, the old industrial world of steel and the new green future of lithium, what does the big picture really tell us? Let's bring it all home with a final scorecard, putting the political rhetoric right up against the economic reality.
This scorecard just lays the whole contradiction bare. Let's run down the list. With iron ore, the talk is all about rivalry and decoupling. The reality? A 60% dependency that's now morphing into a new partnership on green iron. For critical minerals, the rhetoric is all about de-risking and building secure Western supply chains. The reality? A Chinese company co-owns the world's biggest lithium mine on Australian soil, and 70% of the product flows to China anyway. And maybe the most jarring of all, strategic ports. The talk is about countering Chinese influence, even hosting U.S. Marines in Darwin to do it. The reality? That very same port is leased out to a Chinese company for 99 years. Which leaves us with this final critical question. When two rivals are this deeply, fundamentally entangled, the old rules of geopolitics, they just might not apply anymore. It forces us to ask, what does it even mean to be a partner or a competitor? And in the 21st century, what does winning really look like when you can't live with your biggest rival, but you absolutely, positively cannot live without them?